Welcome back to my channel. It's nice to have you here. For those who are new here, don't forget to click the subscribe button. And for those who aren't new but still haven't subscribed, what are you waiting for? So what are we talking about today? So if you are planning to buy a home, your credit report is one of the most critical factors that lenders will look at. But what exactly do they check? And how can you prepare and pass with flying colors? So in today's video, I'm going to be breaking down every detail of a credit report with examples and tips to help you secure that dream home. So let's dive in. Number one, first up, lenders will check your personal information. This includes your full name, your current and past addresses, and date of birth. It might sound really basic, but mistakes here, like old addresses that you forgot to remove or update, they can really slow down your mortgage application. So for example, imagine you've moved house 3 times in the past 5 years. If your credit report does not reflect your current address, it can create a bit of confusion and delay in the process of your application. Another key detail is whether you are on the electoral roll. So being registered to vote at your current address really does boost your credit score because it shows stability and it makes it easier for lenders to verify exactly who you are and your identity. So if you are not registered, please fix that today. It's free and quick on different sites like Experian, Equifax, etc. Number 2, lenders will analyze your credit accounts. So this includes all open and closed accounts, such as credit cards, personal loans, car finances. They will look into your payment history, which is a big deal. So any missed or late payments can stick around for up to 6 years. So for example, if you missed a £20 credit card payment, say 3 years ago, that small mistake is still visible to lenders even today. Even a single late payment can make them really question your reliability. Then there's credit utilization, and this means how much of your available credit are you using. So let's say you have a credit card with a £2,000 limit and your balance is £1,800. That's a 90% utilization, which lenders see as risky. Aim to keep it below 30%, so in this case, no more than £600. Number 3, credit enquiries. Have you applied for any loans or credit cards recently? If so, your credit report will show these as hard searches. These happen whenever a lender checks your credit during an application, and too many hard searches in a short time can really lower your score because it looks like you're desperate for credit. But on the other hand, soft searches like checking your own credit score or pre-approvals, they don't really impact your score that much. So feel free to really check around your credit report regularly. Knowledge is power. Number 4, defaults and late payments. Defaults are one of the biggest red flags on a credit report. A default happens when you've failed to make a payment and the creditor closes your account. So let's say you had a phone bill that you didn't pay off and it went into default. This stays on your report for 6 years, even if you do pay it off later. So if you've missed payments in the past, try to settle them or explain them to the lender. They really do actually appreciate honesty and steps towards improvement. Number 5, public records. Lenders also check for any legal or financial issues in your public records. So for example, county court judgments or CCJs. These happen when you are taken to court over unpaid debts. So if you've ever filed for bankruptcy or entered an voluntary arrangement, which is also an IVA, this will also appear. These records make lenders cautious. So if you've ever had one, it's really crucial to show how you've recovered financially since then. Number 6, debt levels and ratio. Your total debt and debt to income ratio are really critical. So let's break it down. If your monthly income, say, is £3,000 and your total debt payments are £1,000, your debt to income ratio is 33%. Lenders prefer this ratio to stay below 40% to encourage and ensure you can handle mortgage payments. So before applying for a mortgage, consider paying down smaller debts to improve this ratio. Number 7, account age. The age of your credit account also matters. Older accounts show long-term financial responsibility, which lenders love. So for instance, if you've had a credit card for 10 years, keep it open. Even if you're not using it, it helps to boost your average account age. Number 8, financial associations. So are you financially linked to anyone? So for example, if you have a joint account with your partner, their credit behavior can impact your application. If they have bad credit, lenders may view you as a higher risk. So if you've ended financial ties with someone, make sure to disassociate yourself through your credit report also. Number 9, negative marks and fraud indicators. So lenders are also really wary of negative marks like delinquencies or repossessions. Another thing they look for is fraud indicators known as CIFAS markers. These don't necessarily mean that you've done anything wrong, but they can flag suspicious activity, so just be aware. If you see one on your report, contact the credit agency immediately. And last but not least, number 10, the credit score. Finally, your credit score is a summary of all of these factors that I've just mentioned. It's a number that tells lenders how trustworthy you are as a borrower. So different agencies have different scoring methodologies and systems, but in general, a higher score means a better mortgage rate. So here's how you can actually improve your credit score before applying for a mortgage. Number 1, check your credit report for any errors and disputes and any mistakes. Number 2, register on the electoral roll at your current address. Number 3, pay bills on time and reduce your credit utilization. Number 4, avoid paying for new credit close to your mortgage application. Number 5, pay off small debts to lower your debt to income ratio that we spoke about earlier. So that's everything you need to know about how lenders review your credit report when buying a home. If you have found this video helpful, hit the like button and subscribe for more tips on property and finances. And also, let me know in the comments, what's your biggest challenge when it comes to improving your credit report and credit scores? I would love to help. So thank you for watching. And as always, I will see you next time. Take care, guys. Bye.